Financial analysis deals with financial decisions that business enterprises make and the tools and analysis used to make these decisions. While there are multiple career paths that involve financial analysis, let's take a look at a few roles in the financial services industry that are most well known. These include sell-side analysis, buy-side analysis, valuation services, equity and credit research, financial operations, forecasting and modeling, investment banking, including M&A and fundraising, accounting, and risk management. Financial analysis is a skill that spans across the entire banking spectrum, from investment banking to corporate banking, and even retail and commercial banking. Within investment banking, we have sales and training, M&A, valuation, research, and equity markets. Within corporate banking, we have treasury, trade, finance, and corporate lending. Within retail banking, we have project financing, private banking, and retail lending. You also have financial analysts at specialist firms for private equity, boutique M&A firms, credit research firms such as Crisil and Care, asset management firms, brokerage houses, and advisory or consulting companies that are used across the banking spectrum. We are among the fastest growing financial services market in the world, with a better than global average GDP run rate of 7%. And the contribution of financial services sector to the Indian GDP is 6%. With India poised to become the third largest global economy by 2030, the demand for financial analysts across domains will outstrip supply. Currently, there are about 18,000 job openings for financial analysts, around 13,300 openings for financial modelers, and around 7,300 credit research jobs on Monster India. But let's say you do become a financial analyst, what would your career path look like? Let's find out. A recent postgraduate degree holder seeking to become a financial analyst can expect to begin in a junior position as an analyst under the guidance of a senior analyst. After 2 to 4 years of experience, the junior financial analyst could get promoted to senior analyst or the associate level. There may also be an opportunity to enter a senior management role. With greater experience and expertise, a financial associate can expect to get promoted to vice president level in about 5 to 6 years. After 10 years of rich experience, a vice president can even become a director of a company. Careers in financial services are also extremely financially rewarding. The average salary of an entry-level analyst in an investment bank is around 7 lakhs per annum, while the average salary of a private equity analyst is about 10 lakhs. The average salary of an entry-level financial equity research analyst is about 6 lakhs. The ability to conduct financial analysis provides participants with strong quantitative and analytic skills, product knowledge, global exposure, and multiple mobility options within the financial services sector. Here are a few reasons why you should consider a career in financial analysis. Financial analysis opens doors to some of the most prestigious front office roles in investment banking, private equity, and equity research, which are considered among the most prestigious across the financial services industry. These jobs enable you to learn continuously and expand your skill sets. As you progress from an analyst all the way to executive director or partner, your learning expands from being analytical to becoming a trusted advisor and investor to your clients, allowing you to master every aspect of corporate finance. You are exposed to various facets of the industry and its many products. For instance, transactions in IB are rarely one-dimensional and usually demands a thorough understanding of not just finance, but strategy, marketing, operations, and even legal documentation. And then there's the global nature of these jobs. Financial services roles have a global outlook, and the cross-border nature of the financial services industry means you work for leading multinational organizations that offer global products and insight across the markets. A financial research analyst researches macroeconomic and microeconomic conditions along with company fundamentals to make business sector and industry recommendations. A financial analyst also performs financial analysis for external or internal financial clients as a core part of the job. He or she also spends a lot of time working on spreadsheets, creating reports, and giving presentations to senior management to help them make better decisions. They also often recommend a course of action, such as to buy or sell the stock of a company based on its overall current and predicted strength. Let's look at the various hats donned by financial analysts. Firstly, they interpret data on price, volatility, future investment risk trends, economic influences, and other factors affecting investment programs. They also recommend investments and their timing to companies, investment firms, staff, or the public. One of the key responsibilities includes preparing plans of actions for investment using financial analysis. They also conduct ongoing financial analysis related to various investments. The job also demands determining the financial viability of investments, keeping in mind various factors such as costs, benefits, timing, market conditions. There are three major types of financial analysts: security analysts, M&A analysts, and credit research analysts. There are, of course, many more specialized jobs, but for now, let's focus on these three. Let's understand each role in a little bit more detail. Starting with a securities analyst, the goal of a securities analyst is to help people make decisions. They conduct research, create financial models, provide analytical reports, make recommendations concerning specific types of stocks, bonds, or other investment securities. They also make presentations on the basis of their reports. Bankers in M&A, or mergers and acquisitions, the embodiment of the investment banking dream. These corporate strategists study industries and on the basis of their research advise the company or client to buy, sell, divide, restructure, or combine companies with the aim of achieving greater growth and efficiency. Merger and acquisition analysts support these complex deals by evaluating financial reports, studying company operations, creating financial models, and deciding how a company will fit with another business or as part of a larger portfolio, along with financial forecasting, modeling, valuation, and creating documentation for transactions. Coming to credit research analysts. A credit research analyst is a financial professional who possesses expertise in assessing the creditworthiness of individuals and companies. In short, he or she determines the capacity of a borrower to repay a financial obligation by assessing the creditworthiness of the borrower through reviewing the borrower's financial history, credit history, and analyzing whether the economic conditions are favorable to the repayment of a loan. Let's have a quick look at the typical day of an analyst. The day of a typical analyst starts with collecting relevant news. That's the reason they need to read a lot in order to stay updated with the latest developments and happenings in global financial markets. They collect and analyze financial information and then make recommendations to the company or clients based on the analysis. Hence, excellent analytical skills are amongst the most sought skill set when it comes to recruiting financial analysts. Financial analysts also need to use Excel spreadsheets and statistical software packages to analyze financial data, spot trends, and develop forecasts. On the basis of their results, they write reports, make presentations, and recommendations to buy or sell a particular investment or security. Lastly, they need to be excellent with financial reporting and have quantitative skills in order to become a top-notch financial analyst. But are technical skills enough to be a great financial analyst? The answer is no. They may help you get the job, but soft skills like people management, time management, communication can make or break you as a manager. So let's look at a few of the behavioral skills required by a financial analyst. The first one is decision making. Financial analysts have to be able to make the right decisions quickly while taking into account several dynamic variables and factoring in the costs and benefits of potential actions. A financial analyst should also possess excellent negotiation and persuasion skills because they need to plead their case and try to get the most out of a situation. This is an integral part of the job because financial analysts are primarily pitching ideas to clients and trying to get mandates. Excellent convincing skills are required to stay ahead of the game. The third skill is the ability to solve complex problems. Financial analysts need to be able to resolve any issue that comes their way and find a suitable solution for the client. And remember, financial analysts do not work in isolation, so excellent interpersonal communication and conflict management skills are needed to work collaboratively with multiple stakeholders within the team. Finally, let's have a look at what a typical day of an analyst is like. The day starts early in the morning at 7 a.m., usually with checking the market news. If there have been any relevant releases or developments concerning the market, then the analyst may need to put out fires. This can include updating data or alerting administrators and managers about the change. This is then followed by morning meetings and check-ins which last usually from 8 a.m. to 10 a.m. Important tasks include contacting or meeting in person with colleagues, presenting investment ideas if any, and meeting clients or potential clients. Depending on the time of the year, an analyst may need to plan project schedules and calendars and understand the flow of the market. Mid-morning to afternoons are usually occupied in projecting and scheduling updates. Junior analysts may meet their senior analysts to discuss the data collected and go through financial models. Senior analysts may meet their superiors to go over a business model or a strategy. They may also spend time contacting investors and networking to grow the business. Between 3 and 6 p.m., they normally spend their time reviewing deals. A lot can happen in the afternoon, which is why most analysts spend this time reviewing reports. This helps them manage their next day's tasks in a more effective way. At around 6 p.m., analysts submit their edited and approved research notes to supervisory analysts for approval. This may also involve writing down key talking points which need to be discussed in subsequent meetings. Finally, around 8 p.m., analysts work on updates received. They also need to prepare a voicemail blast for distribution to certain clients.